Good afternoon, everybody. Hope let me know if you guys can hear me and you can see my screen. So if somebody can let me know on that. If somebody can drop in a message stating they can read into my screen and can hear me. And can you hear also, Joe? I would assume yes. All right, so I'm going to go carry on with today's session webinar. Before I start off, I'll just reiterate some of the moves that we mentioned yesterday, and pretty much those moves were again mentioned back on Wednesday also. Wednesday was one of the days where I mentioned yesterday that you would every time that we come in for purpose of trading, and when we analyze the markets, we always go and look for those heavenly days where the markets, first of all, they carry a lot of volatility, a lot of volume, a lot of liquidity, and at the same time, the points that we have picked up, they go into the market and show minimum or as less as possible on the drawdown, and provides us with the best reward that we can look for. So Wednesday was one of those days that probably, in terms of how do I put it, yeah, I would say that usually come probably once in a month or maybe once in 5 to 6 weeks, where no matter what you do, the market goes and respects that, and not only that, it just goes and it's willing to give you as much as possible. So it's difficult for anyone to go and conduct uh, market analysis, and especially if that's the first instant that goes in and the progress has been phenomenon, to go and repeat that again and again, because it's not that how we go and try to lay out the setups and how we want the setups to get played out. In the end, we are at the mercy of the market, which I mean is basically we want the liquidity to be there, we want the volatility to be there, we want the ranges to be there, and then of course we want not to be us sitting in for a very longer time, but let's say what can be achieved in uh, let's say 24-hour time frame. If the same thing can be achieved down in 1 hour, 2 hours, 3 hours, then of course for personal reasons and for purpose of making money, it becomes easier and much more fruitful. So that was the session on Wednesday, which was the which those sessions are rare, but normally what we do is that, and I was thinking on those lines, because I don't want people to go and get into a false impression, because what really drives the market is volatility. So Thursday we had more of a consolidating mode than more into a trend mode, and that's one of the reasons where things were not happening too much, or it was just a slower pace into the markets. Anyways, let's see what happens today. We'll start off again with the euro, because a lot of people prefer trading this pair. On my personal side, this is one of the trade that I try not to trade too often, maybe once in a blue moon, and I've got my own reason for that, because probably uh, the reason is that I conduct into too many different pairs that I find other pairs much more better in terms of volatility and market movements, and more also into a trend phase that don't require too much to go and get involved with the euro. But Wednesday again, we were looking for shots. We were looking minimum target 21 70 zone, right, towards this trend line here. Let me do it this way. It becomes much more easier. Yeah, basically we were looking to go short here, so those were picked up. We were had a tentative target all the way down here. Market swing back, and this was our extended zone to go and sell again from. So that held back, hit down here. So this was the point where we wanted to go and take a profit on the sell, and this was also the region 2140 I mentioned that we were looking into buy back on this pair and then hit back somewhere around here. So this move is already in motion, as in, it's been a slow paced movement, but it's already surely going in. So as of right now, with this, in fact, there's a few things that can be done. One of them is basically anything close to 22, 45, 50 back on this line. If the price falls in and starts showing you a holding pattern, that's mean it shows that it wants to go and respect it. So then we can assume there's another move coming in that can go back, and probably we can go and test back around close to or around the the high for the year. That's 23 in the chain. So that's a move that can be capitalized on, like probably about, I would assume, between 50 and 60 pips. But given the scenario and the way it's been structured in, and given the fact that today is Friday, last day of the week, um, buy into it if you think, if it starts holding around 2240, 2250, if it starts holding into it, buy the longs. But then this is one of those trades where you probably have to go and give yourself a small stop loss. So, maybe a stop right under here and see if it can start pushing up. So ideal scenario, it drops down here, you build into longs, and if it crosses a back above this high, then it should go and continue here. So around close to this previous high, there is a shorting opportunities out there, but I will not go and delve into it. But yeah, surely there are shorting opportunities between here and this region, and if they go in perfectly well, then you can again retrace back again to this zone. So this is back and forth kind of move out here. I don't expect too much on the euro to go and start breaking. I think most likely, even if it goes and tests back on the new high, it should retrace back down on the lower side. But this is one of those trades that I'll be a bit cautious on. If I really have no other option, then maybe I'll go and try it. So this is my view on the euro, and this is the same thing on the bigger time frame, since this is a 30 minutes, and now I'm going to push it down on the 8 hours. So yeah, on the 8 hours, I was looking better more down here and then back up. So eventually, we can go and test back up to maybe 2350. So those who look to build in the buys, they can probably go and take these longs. It depends how you trade, but technical wise, if the move comes down here, you can try to build some long and probably push it all the way here or maybe up to here. But around 2350, around 2350, I would no, this is much more in my comfort zone. That's been around. If I see the price around 2350, I would have no hesitation in going short. So yeah, this is where I would pick my shots up. And as soon as it starts breaking under the previous resistance zone, which is turning support, I will try to see the price push back out here. So yeah, this is still doable. My preference would be to go short from anything close to 2350, right? If I built on a long here between 2245, 2250, that will still be more I'll still be more cautious about it. Anyways, this is the way it's been laid out. So I'm telling you the way it is, not based on how I feel. So I'm gonna take my feelings and my emotions out of it. So this is on the euro. Pound has been relentless. It's it's been it's been challenging on pound, and the reason is I we got something out here, but then of course the patchy move would require to go and get out on break even, and now this thing does not matter. I would go with a larger time frame on my weekly. That is, I would assume pound may just have some more to go and travel on the higher side. So the way things are shining up, if it starts breaking up the yearly highs, which is roughly around 39, 42, 43, I would assume it to go and carry into the 4,000, 1.40 handle. So probably about 40, 10, 40, 15, 40, 20. These are the numbers. If I see 40, 15, 40, 20 getting printed on the pound, I'm selling it. I am not waiting into it. I'm just selling it. So I'm just gonna go cautious on the British pound. There's a shorting opportunity right here at the highs that's been printed right now, but this on the weekly shows it got more room to go, which is basically if somebody is aggressive in nature. I mean, if you got aggression on, this is the way, this is where you're selling into it. That's mean you're still thinking that this is a top, this is another top, and then you can sell it back all the way down here somewhere around 37, lower 37. But what I'm saying is that in case if it breaks up, it should go into touch 40 15, 40 20, and that would be a better point to go short. So if you're shorting here at the current highs, I would call it aggression mode. That's mean if you're aggressive and you think you're probably gonna have a double top scenario that we might be phasing out having a double tops here, then yeah, I mean you can do it, but then your stops are lower and you can try it out. But keep in mind the weekly has got room to run on the higher side. So with that in mind, I'll leave it to your discretion. Um, prefer prefer would be 40 10, 40 15, 40 20 to go short. Aggression, you should already be short in. But don't get me wrong, may not go all the way to 40 10, 40 15, 40 20. The one that I'm looking into it might just flip flop from here, and then next descent could be, this point, this move could be a swift one too. It could be like very early, depending if we end up having a double top. And another thing that I'm looking into it is the formation of wedge here. So it's just a matter of time that it's just a matter of time that for it to be double tops here, for it to be double tops here, then we should be breaking shortly. So the people who are short, as soon as it breaks under here, they would be really happy because I would assume the price to start moving to this direction. So yeah, I mean this is a trade that I would leave it to discretion. How would you rather be aggressive, or would you be waiting for better levels to come in to go in shots? So yeah, I mean opportunities are there. It's always a matter of opportunities and how you define those opportunities. Sometimes the aggression works, sometimes the aggression does not work. Sometimes being cautionary works, sometimes being cautionary, won't work because I won't get those entries. But that's fine. Everybody is on their trading size, on their trading methodology is totally different. So there is no hard and fast rule. There's the only rule that exists that allows you how you will perform into the market and whether you're going to be here next month, next year, 10 years from now, or 20 years from now, is how you control your emotion and how well you're equipped with your money management skills, and how well you've been trained into. And repetition of that means I'm trying to portray a message out here that is, uh, try to avail the best Stochastic Africa has to offer. Get enrolled with the training program. And people who have not even opened their demo accounts, I would sternly suggest that go and get involved with our website, chat to our people, and at least go and open yourself a active trade demo account, and you can start practicing trades out there. Anyways, at the same time, I know a lot of people do not understand the concept of trend line, which is fine because I'm not here training or defining what trend lines are here. I'm just using my trend line expertise to go and define and basically do an analytic move or analytic view on the market, and that's what I'm trying to explain out here. So this is what pound looks to me right now. Possible double top might come in, but in case if you're breaking over, then 40 10, 40 15, up to 40 20 is the zone that can look for. If I get to see those numbers, I don't have any problem going short. So that's the view on the pound. Pound was a bit of a nasty side yesterday to go and control it because there was hardly anything to make in terms of the money that we wanted to go and sell. We wanted to go and sell between 39.50 and 39.70. It did. it did start falling a little bit here and there, a little bit here and there, but it was not an optimum move. So as I explained on Wednesday, and I re-explained on Thursday that there's way that we go and trade into the markets, and one of the ways is that how we look to amend our stops. So these are all the things that you need to come down into into the training program, get involved with our trainers, and this is a part of money management, how you control, and even to an extent how you can go and if guided correctly, how can you go and control into your emotion, because once you can start controlling your emotions into the market, and at the same time you know how to go and control and uh, manage your funds, has been you can go into money management, you can be a really risk averse trader, and that's what's going to set you up from whether you're going to be a successful story or whether you're going to be sorry to say a failure. So yeah, uh, mainly what I'm trying to say is that learn from our mistakes, because for us to get down to where we are, we have made a lot of mistakes, right? Not many people during our time to go and correct us where we were going wrong. So it was always about trial and errors, trial and error, trial and error. But the thing is that I never gave up. So I would strongly suggest, instead of making your own mistakes, and trust me, these mistakes can be very expensive in nature, financially, emotionally, and with all that said, so make the best out of the training program that's been available by Stochastic Africa. Go open yourself an account with Active Trader, and get into the habit of not just going and trading and trying to see if you can do it or not. At the same time, start going with the learning phase, because not till you go and get yourself equipped with the basic, and then get yourself equipped with the practice, and then get equipped yourself with getting to know more knowledge, getting into more advanced stages. Not till that, you're not gonna be. It's gonna be a struggling journey for you, or you can make it easier, a smoother one, and the one that can be more progressive in nature. So yeah, the options are all yours. So with that, I'm just gonna move out to the dollar yen. We mentioned dollar yen yesterday that yeah, that I was basically. mm, Yeah, this is what we had yesterday. I'll again just use that and then carry on from there. This is what we had yesterday. The price was traveling somewhere around here, and I was hinting down that I would basically prefer a break lower and touch down to 110 60th zone and then go for a buy. So basically, what I was looking for, a re-break here. So this break here and then retest, that becomes a shorting trade all the way here, and then you buy back for here. So if it falters here, I mean the next move would have been expected for 1220 in case if it broken back in again, but then it's flirting back, going under. Anyways, our trade mode was successful, because all we wanted was a move down under towards this trend line, and then buy back for at least bare minimum here. So coming back to current scenario, I think the bigger picture is still here, which is that price is trying to form base. That price is trying to form base here and wants to go and test 1220, that zone that's still there. So I still think there's a opportunity to go long, because not till we get to trade. What I mean to say is that not till the price breaks under and then starts trading under, not till this scenario happens, I would prefer to go and see longs and at least get a retest back towards this zone. So that's what I'm still looking for. So in terms of taking position right now, let's see if we can get something uh, decent to go. Let's say if I use an hourly chart, and if I can find myself a position to go and get into it. Yeah. Okay. Actually, yes. So basically, right now, I'm still, since my views, my bias, here I'm biased. I'm biased because, as I explained to you on the daily, I have a I have a possible basing on the pair coming in. It's just that it's been consolidating at the same time. So with pair been trading under here, I'm expecting this move to come down and hit somewhere around 112, 20, 25, some around these numbers. And I would like to go and try buys for 110, 75, 80 initially. And if it starts breaking on the higher side, then I think we got a game on. Then again, we got a game on. So yeah, I'm still looking in this direction. I'm still tilted here. So yeah, I have no problem going and considering trade around 110, 20 zone. So yeah, there's still an opportunity on this pair that can come into play. And one of the reason is that the dollar, as I mentioned back on Wednesday and Thursday, is still flirting around with the same support zone. So if this is a dead cat and can go in for a bounce, then I think all these moves, it's just a matter of you getting into an opportunity into a market, and then the rest will likely to go and follow on. So yeah, this is where the weekly stands on the dollar. Still flirting. This is a weekly chart. It's still flirting around, right? So it's a good thing. The more it stands here and not breaking under, the better chance it is that it's going to go and fly back up. So basically, this is probably a weekly chart. So if we can close today above it and tomorrow maybe get another test here on the lower side, right? But as long as we do not close under, then I expect something like this. So that could be a huge move on the dollar. So that's one of the reasons why I'm still, I'm still looking to go and try some shots on the major USD pairs, some from what I probably turning out to be some optimum zones on them. So that's a reason. At the same time, if the dollar can break under and can start following, pricing under it, then I think it's a totally different scenario. Then I think dollar would be in a lot of trouble, and then uh, all the major USD pair most likely, not most likely, they probably will start surging against the dollar. So yeah, so this is a reason behind it. We took Canadian and see if the Canadian is still active yesterday. Yeah. This is the same old chart. I haven't updated that because there wasn't a requirement for it. Anyways, this is a slow moving pair. The big move came in on the Bank of Canada. We were able to catch this move. Anyways, yesterday suggested that we're going to come down, head down back towards 2400 zone, and then would like to see it base. So it's trying to base in. There was some movement, which but not enough to go and capitalize into it. So it's really moving slowly. This is a pair that moves really slowly, but can catch up on speed when it comes down to the American session, especially if it's got some news even coming onto it. So yeah, this is a pair which is still, I still will look for maybe 2400, 2380. This zone still has been supportive, and as long as the bounce can come in, I would expect it to go and start breaking on the higher side and carry on the top. Alternatively, if it starts breaking under, then probably it's going to go and retest this low. So, uh, kind of neutral view, kind of neutral view. Hold on, it's time to now. It's time to yeah. So, was sometime. Actually, let's do this. Depending what sort of trader you are, these are still positions to go long. But now, since we've been striking, and yesterday, you know, right now we should have been at least been above 24.50. So it's still pushing on the lower side. So with that thing in mind, you know, maybe I think maybe we can probably break under and hit down here. So maybe the better place to go now long would be here. So that would be around 23. I would assume 23.30, somewhere around there, or around the low that were printed on the Bank of Canada view. So I'm just gonna go get a bit neutral on this pair right now. Maybe wait for dips here and then go and look for buys. Uh, we tried a few times here, and this isn't moving. So just this is where the cautionary view come in. So I'm ignoring. It can very well bounce right from here, but I'm ignoring, and I'm waiting in for downside. So if it starts breaking under, might even on a retest, might even go and try to sell it from here to here, and then buy back here, which is basically I'm saying is that if it breaks under here and then go back retesting here, starts holding, I'll sell back here. I'll take it down here, and then I'll try to take back here. And then if it goes and start breaking on the higher side, I'd carry with the long side, because then I think it will go and then it will go and break it. And from here under, it should follow through. So yeah, this is what Canadian dollar looks to me right now. But my approach becomes a bit cautionary. And another thing that we did was gold. See, not every day is Wednesday in my case. Most of the days one has to go and struggle. So the reason behind going and conducting a lot of different pairs is solely that you get a lot of options to go and trade into the market. So this is what we did yesterday: 32, 33 through sell, dropped down like about $8, $9. Now pushing back again on the higher side. This is where we conducting our second resistance, which was 35, and which is probably about right here. 37 today, so 38 is a high. So this is probably still becomes becomes in this fashion. So there's still a shorting zone right here. So that's high print, anything close to 20, 30, 37, 38 again is shortable. So I still look forward towards 13, 14, 13, 12 as a point of impact. So nothing has changed much apart from, see, when the price are consolidating, that means they're going inching lower, then inching higher, then inching lower, then inching higher. It's just building in basically it's building in momentum and just carving in a bit more on the ranges. So yeah, what this thing was in effect yesterday, now this is in effect today. So no, we can still go and try. I can still look for try and shorts and see if it can break under here to go and get this move on. So, but alternatively, above here, I would assume just back on the high, and then this. So as of right now, between 37 and 39, still a shorting opportunity to me, based on the, hold on. Something is happening and I'm losing my charts. I apologize. No idea where my charts are gone. I'll have to bring them back up. In the meantime, if somebody got any question, do let me know. If somebody got any question, please do let me know. By the time I just pull the charts back in up again. Let me know if anybody has got any question for me. I can use this time to go and probably correspond to it. All right. I'm still waiting for the charts to pop up any moment now. I'll be back on momentarily. All right, let me know you can see me again. Yeah, so I'm just going to go and carry on from there. So I was telling about the goal. Yeah, this was the yesterday, and the extension that I was mentioning yesterday was here, and that is in effect. So pretty much still to me, this thing is still within the resistance zone. So yeah, this is still shortable to me. And as I said, I'm still looking for something into lower 13, something like that. So yeah, with that, that's still an effect. And then one thing I would like to reiterate would be on the S&P that we mentioned. Yeah, I was looking at over the daily where I mentioned we might be having a triple top scenario, and yeah, that could be shorted out here. So it's still flirting around doing nothing, but I still prefer it to go and touch down maybe back towards these lows. So and then probably we'll see how it goes. But being Friday, I'll just try not to get involved with the stocks market right now. So let's move on to something newer, probably about now about a year odd. We didn't touch it yesterday, so we can go and look into it today. Yeah, this is just a look into it, and I can, it tells me still heavy consolidating phase out here on the Euro Aussie. If it's consolidating right now like this, then probably does not give you a better opportunities into the market. Uh, what I think right now is that I'll just go with the short term phase. That is, there's a resistance out here around 5450 level, and I think a base building down here. So yeah, if I have to do something on this pair right now today, uh, this is what my interest would lie into. That is, use see if this retrace can go deeper right here, and look for possible buys at this end. So 52, 20, 25, 30, I think whichever the level that is coming into. So out here, I will try to see and buy and see if I can go and at least push back one more time towards this zone right here. And then that would be, even if I get a half the way price from here, half the way price here, that's like 50, 60 pips. That still looks decent enough. It still looks like it wants to go and conduct a bit more on the consolidation. It would be most likely it'll be a slow mover. As of right now, I think it carries more. Uh, it should go and do this dip. It at least is hinting into it. A deeper one can go here, but I'm not looking at that for now. But at least a move towards 52, 20, 25, 30 towards here, and then see if it can bounce back. So that looks like a move that can be looked onto on the Euro Aussie. So, but of course, the better, bigger support is this right here, and that matches the previous low. So that could, eventually be like double bottom scenario. But given, I think 52, 20, 20-ish for now, and can look for an impact out there. So yeah, that's for Euro Aussie. Uh, Euro Japanese. There truly does not look like too much uh, opening for something that can be taken for longer period and make the most out of it. So it looks like more like a dull phase, but let's see. So Euro Japanese is most likely, yeah. So 134. It shows a wedge. I'm gonna be a bit neutral on it. I think the way it's been structured, this is the move that I think is coming. It can do this move, so it can drop and hit down here and then push back up. All right, but I don't know. Being aggressive would be would be sell here, 136 10ish zone, and then see if it can pull back under it. But the way it's been going, it can even go and retest one more time, 136.40, and then try to come back here. So leave it to the discretion. But yeah, uh, aggressive traders would probably look for 136.10 zone, 36.10, 36.15 around here to go and probably set shots up in anticipation that we might break under. So, or this can just hit back here one more time, and if it starts holding, then go back for this move. So yeah, it's pretty much the same thing like the Euro Aussie, but a little bit clarity is here that uh, a break under actual move would be the break under. That would be the one that's more healthier, that looks more safer in nature, because you want it to break out of this and this trading band. So then I see some width for it to get down. So yeah, leave it to your discretion on this thing. bit on the neutral, maybe, if it comes down here, starts showing a holding pattern, then might go with a small stop loss. Otherwise, 136.35, 136.40 zone looks, of course, looks better, being the top of the range. So yeah, that's again, I lost it. That looks that on that. And I think I'm going to conclude my session for the day here. I wish you, all of you, a good luck, a prosperous day, and at the same time, we're having a live seminar uh, in Dar es Salaam University. So those who can come and attend, who are within the area, would like them to come and join us. For more details, visit the website Stochastic Africa. And with that, I sign off for the day and see you shortly.